Before we dive into today's topic, I want to take a moment to welcome you here and wish you a happy and prosperous new year. This channel has been a long time coming, and I'm genuinely excited you're watching. We will cover all things real estate in Western North Carolina. For those who do not know me, my name is Bill DeVore, and I'm the owner of the Bill DeVore Real Estate Group with Keller Williams Professionals, and I'm based in Asheville, North Carolina. As the #1 individual top producing agent, I've spent years helping buyers and sellers navigate real estate decisions, especially in markets where emotion, lifestyle, and long-term planning all collide. And the reason I started this YouTube channel is simple. There's a lot of noise out there, a lot of opinions, a lot of headlines designed to get clicks, but not a lot of calm, clear guidance that helps people actually make good decisions. This channel is all about clarity, cutting through the hype, and having real conversations about real estate, the market, money, timing, and lifestyle, especially here in Western North Carolina. Whether you're thinking about buying, selling, relocating, investing, or you're just trying to better understand what the market is doing and why, then this channel is for you. You don't need to be an expert. You just need good information and a trusted perspective. I also want to be clear about something. I'm not here to predict the market. I'm not here to scare you into making a decision. And I'm definitely not here to chase trends. My goal is to help you think long-term, ask better questions, and make decisions you feel good about, not just today, but years from now. We'll talk about things like mortgage rates and your buying power, market shifts and timing, lifestyle decisions and location, and how to approach real estate with confidence instead of fear. Some videos will be educational, some will be strategic, and some will be more personal, but all of them will be honest. If that sounds like something you value, I'd love for you to be a part of this community. Please make sure to subscribe, turn on notifications, and drop a comment below, even if it's just to say where you're watching from. I'm excited to build this channel, excited to share what I've learned, and I'm excited to help you navigate what's ahead. All right, let's get into today's video. Mortgage rates, inflation, buying power. These three things are shaping every real estate decision heading into 2026. And most people don't actually understand how they work together. What I see every day is people reacting to headlines instead of understanding the bigger picture. And that's usually where costly mistakes get made. In this video, I'm going to break down what's really happening and what most headlines get wrong, and how smart buyers and sellers are positioning themselves before the next shift happens. If you're thinking about buying, selling, or even just planning for the next few years, this is one of the most important videos you'll watch, because clarity beats timing every time. Right now, there's a lot of noise. You'll hear people say things like, rates are coming down, just wait. Rates are high, prices are going to crash. Inflation is over, or nothing is affordable anymore. And here's the truth. Every one of those statements might contain a piece of truth, but none of them tell the whole story. The confusion comes from trying to make real estate decisions based on one variable. But real estate doesn't work that way. Real decisions are made at the intersection of mortgage rates, inflation, inventory, and your own personal buying power. When you only focus on one of those, you miss the bigger picture. And when people freeze or make emotional decisions, so let's slow this down and walk through each piece. First, mortgage rates. This is the number everyone fixates on. Here's something important most people miss. Rates don't need to go back to 3% for the market to move. What made the last few years unusual wasn't today's rates. It was how historically low rates were for such a long period of time. When you zoom out, rates in the 6 to 7% range are actually very normal. As we head into 2026, the bigger question isn't, will rates drop? The question is, will rates stabilize? Because stability brings confidence. When buyers know what to expect, they adapt. When payments stop swinging week to week, people start planning again. And even small changes matter. A 0.5% difference in rates can mean hundreds of dollars per month, tens of thousands of dollars in buying power, or the difference between waiting and acting. Now let's talk about inflation, because this is the piece almost no one connects properly to real estate. Inflation erodes purchasing power. That's true for groceries, gas, insurance, and housing. But here's the flip side most people forget. Real estate has historically been one of the strongest hedges against inflation. When inflation rises, construction costs rise, labor costs rise, materials rise, and replacement costs rise. And once costs rise, they rarely come back all the way down. That creates a long-term floor under housing values, especially in desirable lifestyle markets like Western North Carolina, where land is limited and the demand is durable. So while inflation can slow demand in the short term, it often supports pricing over time. That's why many markets don't crash. They pause, reset, and move forward again. Buying power is not just about price. It's about monthly payment, cash position, and long-term affordability. Approval and affordability are not the same thing. Approval is what the bank says yes to, and affordability is what fits your life. Here's a simple example. A buyer who could afford a $900,000 home at a 3% interest rate might only qualify for $700,000 at a higher rate, even if prices haven't moved much. That doesn't mean the buyer disappeared. It means they adjusted. They might buy a different home, choose a different location, put more money down, or focus on long-term value instead of size. In 2026, the buyers who win will understand their numbers early, be realistic about comfort, not just qualification, use creative financing when appropriate, focus on value and not headlines, and sellers who will win will price based on reality and not hope. If you're a buyer, here's the opportunity most people are missing. When rates are higher, competition is lower, negotiating power increases, sellers can be more flexible, and emotion is removed from the process. You can always refinance a rate. You cannot renegotiate the purchase price later. The smartest buyers I work with aren't trying to time the bottom. They're focused on getting the right property, buying in the right location, locking in value, and positioning themselves for the next cycle. Waiting for perfect conditions often means paying more later with more competition. If you're a seller heading into 2026, pricing and presentation matter more than ever. Buyers are still out there, but they're educated, cautious, and selective. They're comparing homes carefully. They're analyzing value, and they're unwilling to overpay just because it's listed. Homes that are priced correctly, properly staged, marketed professionally, and positioned honestly, those are the homes that sell. The market is no longer forgiving, and strategy matters. Mortgage rates, inflation, and buying power aren't reasons to panic, they're signals. And people who understand the signals move with clarity, not fear. 2026 isn't about predicting the market perfectly. It's about positioning yourself intelligently. The best decisions are made when you understand the landscape, not when you react to noise. If you found this helpful, make sure to like the video, subscribe to the channel, and share it with someone who's trying to make sense of today's market. And if you're buying or selling in Asheville or anywhere in Western North Carolina, I would be honored to help you navigate this with confidence. I'm Bill DeVore, and I'll see you in the next video.